bird on a tree. I'm just sitting here, I got time, it's clear to see. From up here, the world seems small. We can sit together, it's so beautiful, you and me. We meant to be in the great outdoors, forever free.
We are going to talk about a question in the June 2012 exam. It is question 5, called Strawberry Kitchens, and is for 20 marks. This question covers the following syllabus areas: analytical procedures, completion and review, the going concern review, and audit reports and the audit opinion. Please note that you get 1.8 minutes to attempt every mark in the exam, and therefore no more than 36 minutes should be spent. To successfully complete this question, you will need to plan your answer, taking care with the time allocated to each part of the question, use the scenario where needed, and have clear and efficient communication. It may be worth pausing the video at this point and printing off the exam question. That way you can follow the scenario as we talk through it. As with any question containing a scenario, it is important to plan the answer and the use of the information that has been provided. Reading the requirements before the scenario is important so you can identify what is needed in the scenario faster. This is crucial given the time you have in the exam. Let's now break down the requirements. Part A asks to explain the 3 stages of an audit when analytical procedures can be used by the auditor. This is a 3-mark question and therefore no more than about 5 minutes should be spent on this. With the scenario below the requirement and this being fairly straightforward, it would be ideal to complete with time to spare, which would help with time management on the remainder of the question. Part B leans heavily on the scenario. It asks to explain the potential indicators that Strawberry Kitchen is not a going concern. This requires you to apply the knowledge you have obtained regarding going concern indicators to the scenario given. Identifying them from the scenario is not enough. You must also explain why they are indicators to get the whole mark per point. This is a 6-mark question, therefore no more than 11 minutes should be spent on this. Part C then asks to describe the audit procedures that you should perform in assessing whether or not the company is a going concern. This once again requires the scenario in order to gain maximum marks. There are general going concern procedures, however, there are specific elements in the scenario that require further evidence, which the examining team is looking for. This is again a 6-mark question, and therefore 11 minutes should be spent. Part D gives you some further information regarding Strawberry Kitchens. It then gives you 2 sub-requirements. Part 1, state Kiwi & Co.'s responsibility for reporting on going concern to the directors of Strawberry Kitchen, and Part 2, if the directors refuse to amend the financial statements, describe the impact on the audit report. Part 1 examines auditors' responsibilities and is a more unusual question than what we normally see on this area. It is for 2 marks and no more than 4 minutes should be spent. Part 2 is a typical audit opinion question that we regularly see in the exam for 3 marks. About 5 minutes should be spent on this. Like Part A, well-prepared candidates should have no problems with answering this within the time allocated. If any of these elements are not familiar to you, it may be worth going back over your notes on these areas before coming back to the video. If you're ready, let's begin structuring the answer. Part A expects an explanation of the 3 stages analytical procedures are used by the auditor. We are told from the auditing standards that analytical procedures should be used at planning, substantive, and completion and review stages of the audit. Auditors use analytical procedures at the planning stage when identifying balances that may require more focus during the audit. They compare the current financial information to the previous year, budgets and industry using analytical tools such as ratios. These help understand the client, identify potential material misstatements, and assess the audit risk or risk of issuing an inappropriate opinion associated with the client. Auditors also use analytical procedures at the substantive testing stage of the audit, where they can be used to test transactions and balances for material misstatements. These can be used where there is limited independent or third-party evidence that can be obtained. An example would be auditing estimates within the financial statements, where these figures have been decided and included by the client's management. The final stage of the audit, known as the completion and review stage, is where you will also see analytical procedures being used. Once again, the financial statements are reviewed, but this time to reach an overall conclusion, which will help form the audit opinion. Analytical procedures ensure the financial statements are consistent with the evidence collected during the audit process. For all three stages, half a mark is allocated for identifying the stage, and the remaining half a mark is to explain why analytical procedures are used. Therefore, ensure a clear explanation is included for all three to get maximum marks. Part B requires the scenario to identify potential indicators that Strawberry Kitchens are not a going concern. We are reviewing the scenario for any suggestion that Strawberry Kitchens would struggle to continue trading in the foreseeable future. As you run through the scenario, highlight, underline and make notes to plan your answer. That way, putting pen to paper will be easier and faster to complete the question. The six that I have selected from the scenario are: their major customer owes 0.6 million and has ceased trading. The sales director has left and has not been replaced. Cash flow figures and forecast are showing net cash outflow. Some suppliers are threatening legal action for non-payment. Strawberry are in breach for non-payment of a loan and now have to pay it back within 6 months. And when calculating a current ratio on the figures given, they do not have enough current assets to cover their liabilities in the current year. If we take the approach to provide one sentence identifying the problem from the scenario and then another explaining why it would cause going concern issues, then we ensure the whole mark will be awarded for each point. Remember, just to state the issue included in the scenario will only give you half a mark. Strawberry Kitchens are experiencing trading difficulties and their major customer, who owes 0.6 million, has ceased trading and it is unlikely they will receive this amount. Losing a major customer means their sales are likely to fall, and with such a large amount no longer to be received, it is likely their cash flow position will worsen. The sales director has recently left Strawberry Kitchens and has yet to be replaced. Experience in sales is needed at this important stage for this organisation. It is likely that they will struggle to improve their sales position and cash flows without an effective experienced sales leader. The cash flow has shown a net cash outflow for the last 2 months and is forecast as negative for the forthcoming financial year. With not enough cash coming in to cover expenses, they will continue to struggle paying liabilities, which will lead to further cash flow problems. Strawberry Kitchens have been slow in paying suppliers, and as a result they are being threatened with legal action to recover amounts owing. If legal action goes ahead, this could cause further problems in being forced to pay amounts in full with money they do not have. This will also restrict the suppliers they can use and the credit that they can obtain to continue their production process. They have missed a loan payment and are in breach of a loan covenant, which has led to the bank asking for $4.8 million to be repaid within the next 6 months. With their current cash position, it is unlikely they'll be able to pay this. Unless they find another source of finance, this will not be possible and they may cease trading. Calculating the current ratio on the figures given in the scenario gives the following results. Taking total assets and dividing them by total liabilities for the current draft information for 2012 gives you a result of 0.64. Doing the same for 2011 gives you a result of 4.5. Businesses ideally should have a current ratio of at least 2. This would indicate that current assets can comfortably repay the current liabilities, and this was the case in 2011. The overdraft and the fact that they now have the loan to repay in the next 6 months clearly shows that they are unable to cover their liabilities, which is an indication they will no longer be able to trade very soon. With each of the 6 indicators explained for this requirement, we can conclude it is looking unlikely that Strawberry Kitchens will be able to trade within the next 12 months. The next requirement looks at what evidence the auditor has to gather for them to form an opinion on the financial position of the company. Part C needs us to describe audit procedures that you should perform in assessing whether or not Strawberry is a going concern. Remember, these are audit tests and are performed at the completion stage of an audit. These audit procedures should gather evidence regarding the financial position of the company, and the scenario should be used to prompt you to look at specific issues that surround this company. Remember that audit procedures should be clear written instructions prepared by the auditor. Therefore, ensure your procedure is clear in what you are doing and also why you are doing it. The main issues for Strawberry in the scenario are cash flow, lack of expertise to improve problems, and restricted supply of resources to continue working. We need to gather evidence so that the auditor can assess the conclusion the client has made on the financial statements. Remember that the company should prepare their financial statements on the going concern basis if they feel they can continue. They could include additional disclosure to forewarn the users of any financial difficulties. And if it is unlikely they will be able to continue in the foreseeable future, the financial statements should be prepared using the breakup basis. 6 audit procedures need to be prepared for maximum marks for Part C. The auditor should obtain a copy of the company cash flow forecast. They should carefully review the assumptions made in preparation of inflows and outflows and discuss these with the directors. This will ensure that the cash flow forecast has been prepared properly and can be relied upon. They should also inspect the loan agreements held by Strawberry Kitchens and in particular any further covenants they may have on other loans. This will identify if further loans may also be in breach which could worsen their cash flow position. Discussions should be made with directors to establish if they are considering how they can raise finance to improve their financial position. Auditors could also inspect board minutes to review any plans that they have made. This will establish if there are any reasonable plans that could improve their cash position in the foreseeable future. Auditors should inspect post-year-end financial information. They should in particular review sales made since the year-end and booked orders to establish whether sales are improving or declining. If sales are not improving, it will be impossible for them to improve their cash flow naturally. They should inspect supplier correspondence for evidence that other suppliers are threatening legal action or no longer supplying with credit. If resources are limited or the quality affected, this could make it impossible to continue. The auditors should obtain a written representation from the directors which confirms the directors' decision that they are a going concern. This backs up the evidence collected and must always be obtained as per our auditing standards. To conclude, our 6 audit procedures are to review the forecast, inspect loan agreements for further covenants, discuss plans and finance options with directors, inspect post-year-end accounts and sales orders, inspect supplier correspondence for further disputes, and obtain a written representation from the directors confirming the going concern status. There are many other procedures you could think of to include, and the ACCA suggested answer has plenty which you can also review in detail. The key is to select 6 procedures, be clear in your description, and ensure there is enough time for the final requirements. The last requirement, Part D, has its own additional piece of information in relation to Strawberry Kitchens. Not surprisingly, there are serious concerns over the going concern of this company, but the Finance Director is going to make no amendments to the financial statements, as the cash flow issues are believed to be short-term. Part 1 is a knowledge question and wants you to explain your understanding of the auditor's responsibility for reporting on going concern to the directors of Strawberry Kitchens. This is for 2 marks, and therefore 2 things regarding responsibility must be mentioned for maximum marks. The key responsibilities are that they should ensure they report on any issues they have with the financial statements. This includes any disclosures they are not satisfied with. If the auditors are not happy with the level of disclosures in the financial statements, they would discuss with the directors and advise the appropriate level. The going concern status would be specifically something they must discuss with the directors if they felt it inappropriate. If an incorrect basis is being used, the impact would be to modify the audit report. This leads quite nicely onto the final part of the question. Part 2 asks if the directors refuse to amend the financial statements to describe the impact on the audit report. This is for 3 marks, and so 3 clear points need to be made on the audit report. Remember, if the auditors are not satisfied with anything material in the financial statements like going concern, they would need to modify the audit report due to a material misstatement. A disagreement on the going concern status of Strawberry Kitchens is significant, so it would be fair to conclude that the issue is material and pervasive. Therefore, an adverse opinion would be included in the audit report. The format of the audit report would change. A basis of opinion, a paragraph, would be included above the opinion paragraph. It would explain that they felt that Strawberry Kitchen's going concern status is inappropriate. Then the opinion section would state that the financial statements are not true and fair. And so, Kiwi must modify the audit report due to material misstatements present in the financial statements. It is material and pervasive, and so include an adverse opinion. And a basis of opinion should be included, and the opinion should state the financial statements are not true and fair. Please remember, to be successful in this type of question, we need to plan the approach and ensure we have identified how long is needed for each part of the question. Use headings to introduce your answers and space out your points so it is clear for the marker where the marks can be allocated. Finally, if there is a scenario, use it. This information was given to you for a reason, and at F8 they are trying to see if you can apply your knowledge to a given scenario and not just be able to remember the facts. I hope you found this video useful. Thank you and good luck. We are going to look at a question from the December 2012 exam called Violet & Co. This is question 5 in the exam and covers the following syllabus areas: written representations, audit evidence and procedures, going concern, and the audit report. This question is for 20 marks. With 1.8 minutes allocated per mark, no more than 36 minutes should be spent completing this. To be successful in this question, we must ensure we plan our answer carefully, being careful of the time allocation, use the scenario, and have clear and efficient communication. It may be worth pausing this video and printing the exam question off at this point. You can then follow the questions and the scenario as we talk through it. The format of this question helps us plan our approach. We can see the first requirement, Part A, is above the scenario. This has no relation to the information below and is therefore to be attempted using knowledge from your studies. The next requirement, Part B, has a small piece of background information to absorb and again is a standalone section of the question with no relation to the larger scenario below it. The final requirement, Part C, is below the larger scenario and therefore guides you to use the scenario to complete. Please note it is useful to read the requirements before reading a detailed scenario. When it's time to read the scenario, we will have a better idea of what we're looking for, and this will help with time management in the exam. Let's now plan our approach to this question and look at what we need to know for each requirement. Part A asks us to explain the purpose of and procedures for obtaining written representations. This is a knowledge question from the completion and review area of your syllabus. It is for 5 marks and therefore you should spend no more than 9 minutes explaining 5 things auditors use written representations for in their audit and how they obtain this information. Part B asks us to describe the relevance and reliability of an oral representation as a source of evidence to confirm the completeness of the bank overdraft balance. This requires you to think about the sources of evidence that should be available and whether oral representations are the most appropriate evidence here. This is a 3-mark question. Therefore, 3 things to help decide whether an oral representation is relevant and reliable. No more than about 5 minutes should be spent here. Part C requires your knowledge on materiality, audit procedures, and the audit report. This is a typical completion and review question, giving you a scenario regarding issues found by the auditor during the audit process. You are required to apply your knowledge from your studies to decide what needs to be done for the 2 clients they have given you in the scenario. The requirement is split into 3 parts. The marks are split between each of the 2 clients equally. So for this 12-mark question, 6 marks are allocated to Daisy Designs and 6 marks to Fuchsia Enterprises. For Part 1, they want you to discuss each issue and assess whether the problems are even material matters. For Part 2, they want you to recommend procedures to be completed on these issues to try and resolve them with the client. And for Part 3, they want you to describe the impact on the audit report if the issues are not resolved. This requires you to apply your knowledge and decide the type of audit report and opinion that would be issued by the auditor. Part C as a whole is 12 marks and therefore 22 minutes should be spent completing it. The requirement states that the mark will be split equally between each client issue and so ensure you spend about 11 minutes each for Daisy and Fuchsia. Let's start with the first requirement, Part A. It asks us to explain the purpose of and procedure